What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 9th, 2023. So if that sounds like something you are interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. And would you look at that? I didn't even have it on the SPX today. I had it on snow. Nonetheless, all good. We're going to go ahead and remove the studies on here. Trying to clean this up a little bit so we can get into some post Powell and essentially post Beige Book. Now, something I talked about yesterday in last night's video, I wasn't really expecting a lot. I think the sticker shock value that we got from what Powell was going to drop was yesterday, and today we had much of the same Powell. Nothing really changed. Nothing changed in the Beige Book. Essentially, aside from what Powell had already iterated yesterday. And so with that being said, Powell has stated that inflation is coming in a lot hotter than expected, especially on those things that matter, that essentially take the budget of the American, right? And this is something I've talked about, is the consumer. Where is the consumer at? And again, Powell is well aware that essentially the consumer is struggling, that it is directly hitting the pocketbook. Yet you're seeing jobs go through the roof. Savings are starting to increase a little bit, but again, something I talked about on the savings aspect is I think people are selling a lot of different assets that they have accumulated that is essentially funding that account, and then they're essentially putting everything else on the credit card to try to pass time until hopefully something else comes up. Essentially what the Fed is doing, and what I've talked about, having two different perspectives, right? Like there's the reality of what's really going on, and then there's a picture that is painted, this fictional picture of everything is fine and dandy in the world, and that's essentially that's gets reiterated through the administration, through media, and through a lot of reports. This is why you get refinement of these reports so that it doesn't look as bad as it actually is. But the problem is you can't refine it anymore. And the problem is the real numbers are starting to come up. And so this is what I've talked about. There is, we are waiting essentially on inflation or these rate increases to catch up. And we're going to see not in this report so much, like I've stated, but more so in the next report, because of the delay on the increase in rates. That the 25-point basis move is going to make inflation jump, and that's really going to scare people. I believe that's going to hit us next month. But again, Powell just reiterated again what he's been saying yesterday, that it essentially caught them by surprise that they may have jumped essentially too soon on going to a 25-point basis move. And they understand that fact. They didn't have the PPI, and the PPI has come in hot. Again, we're going to get refinement into that. We did have the jobs jolts report, which is showing major strength in employment, which is not good. And something I said, for the bulls, you don't want a strong report, because that's just going to mean that Powell's going to have to come in hitting harder, because he's trying to kill demand, and it's just not, from what the data is showing, it's just not showing to be true. And again, realizing that just because there's a lot of jobs, people are still, I think the calculation on how that's interpreted is very, it's not taken in the right light or right aspect. I think people are failing to connect the dots, and so this is what's leading in this big misunderstanding of what's going on with essentially the jobs report and what's going on in reality. And so you'll always have these two different perspectives, one which is essentially the reality of the truth and what's really going on, and then this painted picture that you see that's portrayed in the media. And so you have to understand, and this is why I kind of talked about the thesis, is having a thesis and trying to build out that that reality of what's actually going on to compare to what is being projected. Again, trying to not cause panic, but again, we are seeing that, and this was just the beginning. Now, the beige book fed a lot of what Powell has said. Again, this is not sticker shock now that Powell kind of dropped that bomb the other day, yesterday. Now you get jobless claims tomorrow, and then essentially you're going to get the non-farms on Friday, which is going to be very pivotal, and then going into the core next week. Again, there's still a lot of other data sets as well next week, but again, the core is what we're really concentrated on. The core is going to be what gauges us going into essentially the next monetary policy. So being said, again, I think that's going to come in a lot higher than anticipated. I wouldn't be surprised if we see a 7 again, and on that case, it's going to be an issue. And so we'll see what happens. Again, I don't want to keep reiterating a lot of the same things. We are waiting on the next data set. Today didn't really have a big play. Again, my concern is that you do have a lot of emergency bond buying that's essentially holding up the market. Again, when you're in a debt system, and currently that is currently what's holding everything up. This reoccurring bond buying and emergency bond buying to help prop the market up, or else I think we would actually be a lot lower than we currently are. But again, we see the market is trying to buy itself time. And then again, something to highlight here that I haven't really talked about is the debt ceiling. I have mentioned it a couple times, but we have the debt ceiling coming up as well. Powell likes to keep reiterating that needs to be bumped up. If it's not bumped up, it's going to be a problem. So that is another huge black swan that can just add to everything. And if things play out and things just aren't good, because you have to remember, as soon as monetary policy is over, we roll into the new earnings cycle. And I think we're going to see some really bad earnings for Q1. And if that's the case, and you have to understand that Tesla, one of the number one companies, is also they've cut back on the price of their vehicles. So not only do you get a tax credit, but they've cut back on their vehicles. This is the second time they've done that, and they're trying to get them off the lot. And something I've seen, something I've talked about, is the automotive industry is really hurting really bad. So mid-sized to luxury vehicles, they're not moving because the rates are so high. People aren't buying, and you have to understand the millennials, right? That they're used to having very low rates, and so rates being at what they are right now, sitting around 6 and 7%. This is huge for them because they've gone almost a decade where rates have been very, very low, and so looking at the 6 and 7 is just astronomical, right? And not understanding that back in the 1979, 1980s, right, the inflation has gone way up to 20, right, or the interest rates have gone way up to 20. We're going to see that again. Time will tell. You can't never take something out of the picture. You have to always try to think of it could potentially happen, and not think, well, it's not going to happen. But because you don't want to have so much bias to one side, I have to keep correcting myself and keep determining if my thesis is right. But the fact is I've never been more of a bear than right now, just because of what's currently going on. And you need something to break for me to think that things will start pivoting at that point. And I think we're very, very, very close to that. We're right on the cusp of that happening. Again, the timing of that, I think, is going to be within the next 6 months. I just don't know what that one thing is going to be that's going to break everything, that's going to cause everything to come down. Again, it could ultimately be a series of events, and then could potentially lead to the debt ceiling issue, right, or in July, and then that's right, and us essentially not being able to pay off our debt, and then that could be the final nail in the coffin. And then whatever else comes, it comes. I think at that point you'll have so much priced in that even if a major event happened after this, you may get a big red day. But aside from that, I think the market in general would start pivoting from that point. But we shall see. Again, I think this year is going to be the big event. Not saying that there's going to be other big events. There will be other echoing events that happen after what's currently been going on. But we have to wait and see. Again, there's a lot of stuff that needed to just be normalized, right? The housing market has been absolutely absurd since 2008, right? Since that was the last major crash in housing, and now we're starting to see too is, you know, um, Redfin put out a report essentially now that we are negative uh, year over year on essentially on housing as well, which is something they talked about coming into this year that no, we're still good. We're still 2% year over year. Now we're not. Now home value has essentially come down year over year, right? And so with that being said, and we haven't seen that in a decade. So that's just something you need to keep in mind. So things are turning over. You're getting a lot of delinquencies. You're getting a lot of credit card companies too trying to remove higher limits on credit cards as well. That's something else that's also going on in the background. So there's a lot of things that are taking place underneath everything that if you're not paying attention, you're going to miss it. And so this is the reality of that I talk about that you need to be paying attention to. That's not going to be mainstream. It might be a little article here or there that, they're not going to put this front row news because again, you're not trying to have, you're not trying to essentially induce panic, right? So with all that being said, let's look at some technicals again. Tomorrow, jobless claims. Again, it's going to have a big move in the morning. Data is very sensitive, but ultimately we're waiting for Friday for Nonfarms, so just keep that in mind. And then again, we go into blackout period next week. We do have a lot of data sets coming out as well with the core next week. So we will see from that point. So as far as the SPX is concerned, again tomorrow, I don't really. We could potentially try to run up to 4,100 again. I think right here you're going to have a pretty hard ceiling at the 40.25. Again, could be a lower high here. Could just be a retest and then potentially drop. So leading essentially roughly to the 3,900. I think going into next week is a strong possibility. Again, I think potentially by the end of the week, I don't know. It really just depends. You got if that non-farms is really, really strong, like it came in last time, I think you can really get a huge move to the downside. That could be concerning. If it's not, if it's mediocre, if it's on par, I think you're just going to continue to get more chop until we figure out what's going on with the core. But nonetheless, we will see. Again, your upside is essentially the zone we got is 40.22 and then 40.75. And then you want it to hold roughly this 39.74. Breaks that, you got the 39.41, and then you got a pretty big drop down to essentially that 3,900. So watching those levels again, it's very you have to wait and see what the market presents you the next day, and that's why price action is so much. If we jump up big tomorrow, then that means the market's okay, and we'll try to run into non-farms and try to absorb more of a potential blow. And then, or if it gaps down, the market's concerned, it's digested everything Powell said, it's digested the beige book, it didn't like what it liked, and so it's going to start selling off. So again, essentially the guidance on the futures are essentially pointing over roughly around 75% on a 50-point basis move. Again, this has been highly visible as to what Powell goes off of, right? So depending on whatever that number is, essentially is what Powell has presented. It's essentially been that way, I think, for like 60 years. So it's been a long time that way. So if these projections are saying it's going to be a 50%, there's a 75% chance it could be a 50-point basis move. It's going to be a 50-point basis move. So the biggest thing is really watching to see that I'm talking about a 50-point basis move right now. But if the core is high, we want to keep an eye on that 75-point basis move and see what the percentage is for that. That will be most interesting, especially if we get a big jobs report, and then if we get a really bad core. Which again, I'm expecting both of those to happen. If they don't, somewhat surprising, but again, you never know. I think they're trying to revise again the jobs because all these shocking numbers that are coming out. Again, as soon as you get shocking numbers like that, they try to revise it to make it look not so bad or not so good, just to essentially again manipulate this other perspective on what they want essentially the world to see. So With that being said, we'll see what happens there. The concern here, again, the dollar. I talked about this. The dollar is up above the 105.60. This thing is going to start really ripping. Again, Powell doesn't care about the dollar. He can care less about what's happening in the world. He's concerned about what's happening in the U.S. and inflation. So this thing is going to make a new high, in my opinion. I think this thing is far from over. I think we got one more huge move down, and then from that point, we'll recover in due time. So the dollar, again, not great. The bulls don't want to see this dollar the way it is right now. The next level for the dollar, you have 107. Again, the first attempt, you're going to get rejected. You get a bit of a pullback, and then you're going to get a pretty big jump up to here. Essentially, your next level being roughly around here, around the 110, and then we'll try to see if we could break out for a new high after that point. Bitcoin, Silvergate is essentially liquidating everything that they have. They've lost $1 billion, I think, in essentially one quarter. So we'll have to see what happens there and what cause and effect that has on Bitcoin. But nonetheless, it's slowly melting off. I think we're just getting set up for a bigger move, and it feels like the market wants to hold out and hope, but it's looking for that final nail in the coffin for this thing to drop. So I'm talking about all markets, not just the stock market. So Tesla, again, it got downgraded this morning. Ever since essentially what's been going on with the presentation day or investor day, whatever it was the other day, they've just been not doing well and selling off. There was nothing huge, right? With what's currently going on, they can't do a lot. And this is what we talk about with all these layoffs and everything. They can't go out and create a bunch of new things because of the fact that we're working with a very constrained budget. And so you're going to start getting times like this. And this is why Q1, Q2, Q3 are going to be really bad. It's going to get worse up into Q3 before potentially turning around. So we'll see what happens here. Again, I expect Tesla roughly around 170. You'll get a bump, and then I think we'll get a final drop down to 140. Question is what's going to fuel us down to this level? If the market starts panicking and selling off heavy, we get a really bad core. We could very well, like I said, if these events play out, how they could potentially play out with getting real numbers and showing that we are in a really, really, really bad state. Inflation is is starting to really rip back up, and then that means Powell's going to have to come in at 75-point basis move. Again, this whole thing is going to get absolutely wrecked, and you'll see it Tesla at 100 again. Nvidia had a presentation day, but it is really having struggles trying to break this 243. See how it breaks above this. If it does break above this tomorrow, I think you could potentially get a little bit of a break. But again, I really think this thing is ran a lot going into not only the earnings, but with ChatGPT and the usage of the chips has really helped Nvidia. I do expect this thing to pull back at some point. Right now, there's just too much fuel to the fire, so it's just wait and let's see what happens. But it will correct at some point. Again, very parabolic. It's going to eventually fill this gap. The question is when. So just have to be patient on that one. But if it can't hold that, again, waiting for it to come back down to the 225, break that, fill the gap, and then you have the other support at essentially 208. So we're kind of watching that. BA again, just consolidating. Nothing exciting about BA right now. Again, needs to break out the 220, or it needs to essentially hold roughly the 188, or the same thing is going to come down. Again, it's got some pretty tight zones here, so you're not going to get huge movement here until it breaks below roughly the 164. Then you might get a bigger move down at that point. So we shall see what happens there. But with that being said, let's look at the banks. So JPM again, it's holding. like it's been holding. The question is will it hold roughly the 136? If it does break that, again, you're dropping down to that next level, which is 130. Breaks that, then you got a pretty big gap it needs to fill down to the 117. So kind of watching for that to happen. Again, it's been really struggling to break out. I think the way the events are lined up, these things are just going to continue to break down at this point. I don't think we have enough juice to push up. I think if there is any, it's very much hopeful or a lot of misleading information that's going to get a lot of people trapped, in my opinion. So that's what I'm concerned about. So Golden Sachs, again, needs to hold roughly the 339, but it's playing that range between there and roughly, again, that 385. So we'll see what happens there. And then that's pretty much it for now. Again, I don't want to make this video too long. We'll kind of wait and see what happens on non-farms. Probably won't really expect much tomorrow. More so waiting for non-farms. So our weekly update should be a pretty big update. And then our next big update will be on the core and what we're expecting next week, and a couple other data sets that we're looking at next week. So with that being said, go ahead and drop a comment, your thoughts, your opinions, your thesis, and then go ahead and drop a like. And until next time, I'll see you guys later.